Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, registered investment advisors, family offices, and individuals like you to help you get better returns in the stock market. I'm here with Enrique Abeyta from HX Research. Enrique, how are you?
I'm mostly good. We had some technical difficulties here, and I will give a little warning that I have had a massive allergy attack last week that resulted in a respiratory infection. So if I have some small coughing fits, please excuse me. They won't last very long, but I'm still battling my way through it, but doing good.
All right. Well, you sound good right now. That's a plus. So, Enrique, I want to talk to you today about Talen Energy. Ticker is TLNE. Before we get started, for the people who are part of the Deep Knowledge Investing audience, I know the HX Research people know you very well, but why don't you introduce yourself and just give people a minute or two of your background, which is extensive.
Yeah, sure. So my career in Wall Street began 30 years ago. I went to Wharton undergrad, briefly worked doing private equity at Lehman Brothers, but moved over to the buy side and hedge fund side in 1996 with a money manager, Atalanta Sosnoff, that managed about $3 billion long only and about a $50 million hedge fund. Became a portfolio manager in 1997, just in time for the long-term capital management fiasco. But for the next 20 years, I founded two funds, Stadia Capital and 360 Global, where we raised about $2.5 billion. I was part of the founding team of another fund called Falcon Edge, which is now Alpha Wave. We grew up from $1 billion to $3 billion. I think they're like 40 billion now. And basically had a 25-year career of active management in equity long short with a quantitative overlay. And then the last few years, I stepped away from the business for a little bit to start an e-commerce business in music. But beginning in 2019, I joined my old friend Whitney Tilson, and we launched a investment newsletter business called Empire Financial. The idea was to take folks that had been doing what we've done our entire lives, and instead of using that knowledge to make money for CalPERS and the United Arab Emirates and all that kind of stuff, was to really be able to open it up and share it with everyone, with regular, ordinary, everyday investors. We had a great, we built a great business at Empire, and late last year I left and formed HX Research, where we have a free daily and a number of paid products, and we can talk about those maybe at the end or something like that. But 30 years professional investor, writing, as well as, I think I'm one of the few newsletter writers that can actually say they managed, over $1 billion actively. So.
Yeah, that's fantastic. Okay, terrific. Well, today we're going to be talking about Talen Energy. Before we get started, just letting everybody know, we are not providing investment advice here. We are providing information. What you do with that is your business. We suggest if you have a financial advisor or somebody, a professional to talk to, you're more than welcome to do that. Separately from that, we are recording this. If anybody is uncomfortable with that, you can disconnect now. And for people who are on the Zoom version of this, feel free to submit questions for Enrique in the chat. The chat is open, and we will be taking questions from members of the Deep Knowledge Investing community and the HX Research community. So Enrique, Talen Energy, I know it's one of your favorite positions. It's up a lot. You've done really well in it for your subscribers. This is one of those stock picks. It's one of those situations where I think the history is really interesting, and taking a few minutes to go through the history is important because there are aspects of problems the company's had in the past that I think are creating an opportunity for it right now.
Yeah. Well, let me actually even take a further step back and just talk a little bit about the group. So first off, what is Talen? Talen is what is called an independent power producer, or IPP. It's a publicly traded company. At this point today, all they own are a bunch of power generation assets. The most important being the sixth largest nuclear generator in the country, called Susquehanna, down in Pennsylvania. Now, one thing I want to do is I'll take the step back to get back in Talen. When I began my career back in 97, 98, I was very lucky to get connected with a group of analysts, utility analysts out of Oppenheimer, a team led by a guy named Jonathan Rowley, another guy named John Rajeski, and another guy named Greg Gordon. And there's been a longstanding multi-decade like specialty investing focus in utilities. And one of the interesting things that happens is once every 1, 2, 3, 5 years, there's some utility that goes bankrupt. And now the utilities don't go bankrupt because they're fundamentally bad businesses. It's not like they're generating power and there's no one to take the power or things like that. Inevitably, the utilities go bankrupt because while the underlying business is sound, the capital structure or some regulatory change, et cetera, happens. And so this is probably the 8th or 9th one of the post-bankruptcy utilities I've done in the last 25 years. And, every single time we've had over a triple digit return, had success every single time. So let's talk about what Talen is. There is a utility in Pennsylvania called PPL. It is the old Pennsylvania Power and Light. Back in June of 2014, PPL extracted their generation assets and they combined it with the generation assets that were owned by a private equity company called Riverstone. That company actually went public back in, I want to say, early 2015. And then in 2016, Riverstone went ahead and took it private. And their idea was, we've got all these generation assets that generate this electricity that can sell to anyone. We'll go out, get a bunch of contracts and hedges, and we'll layer a bunch of debt on it and do some very great equity returns. It worked pretty well for the first few years, but what happened was as they went into 2019, 2020, and we remember what happened with COVID, there were just various disruptions where essentially the market, the supply and demand became imbalanced. There was more supply than demand. Their earnings fell precipitously. The company was still very, very profitable, but the problem was you had this huge debt load, okay? So we had an issue here that was very structural. So the company actually went into a bankruptcy proceeding. I want to say they went into the Chapter 11 filing was in May of 2022, and the company emerged from Chapter 11 in May of 2023. It was just about a year ago. Now, in the beginning, Talen, and I'm going to move through this quickly, had kind of a hodgepodge of assets. You had roughly 12.5, 12.7 gigawatts of power of generation assets, which was a mixture of both assets in the PJM market, which is Pennsylvania, Jersey, Maryland, with a few assets in the ERCOT market, that's Texas. You had a data center business. They actually went out and built a data center for $300 million co-located to the nuke that they had. This is again Susquehanna. But then they also had, a lawsuit with PPL about some stuff in Montana and some other noise and all that. So when they emerged out of bankruptcy, the company had about $2.35 billion of net debt. The debt was put together very nicely structured. They had plenty of terms on it. They had plenty of access to liquidity. But something else interesting happened by the time they emerged from bankruptcy. And this has to do with the Inflation Reduction Act. And we won't get into the naming of that act and how appropriate or inappropriate it was. But one of the things that was put in the IRA was a tax credit for nuclear generators. And what's been interesting politically is that we've actually seen a movement that both sides have become much more supportive of nuclear energy, which, by the way, is one of the few common sense things that we've seen politically in the last few years. So what happened is this tax credit essentially put a floor underneath prices for energy that come out of nuclear power plants. That tax credit, where it sits today, puts about a $42 floor underneath the power that comes out of Susquehanna. Their generation costs are $23. So that means automatically this nuke is generating $20 of profit. And what's interesting about that, and it's a 10-year tax credit, I do believe it will get renewed, and I do believe the nuke will get renewed. But while there's a floor, there's no ceiling. So power prices could go to the moon, and they can take in all the profit. So we come out of bankruptcy. The stock is, and it still is, listed OTC. And for those of you who aren't aware, OTC, or sometimes it's called the pink sheets, what happens is the listed exchanges, the New York Stock Exchange, the NASDAQ, actually the American Stock Exchange, which I think is now part of the NYSE, they have certain requirements, historical, financial requirements that are necessary in order to be listed. Now we all know there's a bunch of garbage that's listed on there, but one of the requirements they do have is you can't have gone bankrupt, just recently. So it takes a period of time to be able to uplist and go off the OTC exchange and onto the listed exchanges. Talen is there, by the way. They've begun the process of uplisting. It'll be a nice little catalyst. And the only reason that really matters too is there are a host of institutions that can't buy OTC stocks, including most of the dedicated investors in the utility space. So step back. We come out of May of last year, the stock's at $50. You got 2.4 billion of debt. Enterprise value is about $5 billion. I'm actually going to pull up my spreadsheet, which is the one thing I did not have open for this call. Sorry about that.
No worries.
So as we've gone through the last year, what Talen has done is they've done a number of things. They settled the lawsuit with PPL, so they were able to go ahead and get those monies. They went out and did a deal with whatchamacallit, with Amazon, where they took the data center they had paid $300 million for. They sold it for $650 million. They're going to get proceeds, I want to say, of about $360 million or something like that. But as interestingly, what they did is when they did that with Amazon, Amazon committed to add to the data center as well as pay $70 a megawatt hour for the power from that data center. Right now, PJM prices are at about $45. So, we've got this generation, we've got this data center, we've got this lawsuit. They settle the lawsuit, they take in the money, they sell the data center, make a nice profit, and lock in a really nice contract. And then just here recently, they went out and sold the Texas assets in ERCOT, which again, this is the Texas market, for about 10 times EV to EBITDA. So where that leaves them now is the company is pretty much a pure play. They own 10.6 gigawatts of power generation, 2.228 of which is coming from Susquehanna. The rest of it is a mishmash coming from coal and gas, settled. Almost all of it's in PJM, okay? And so you really have a pure play on power. The other thing that to note, it's truly a pure IPP. They have no regulated base to sell to. They can sell the power to anyone they want. And because it just came out of this process, they actually have a fair amount of availability. Meaning, and I'm going to do these numbers off the top of my head. I could try to pull up the most recent investor presentation, but I believe that for the coming year, they're 88% for. Actually, here it is. They are 88% forward sold in 24, 38% in 25, 17% in 26. This means that they own this generation, especially the nuke. But what they're able to do is they have a lot of exposure to power prices in the coming years. Now, I want to take a step back and talk about what's happening in power because it's very, very interesting. We have not invested in any real net power generation assets in this country for 20 years. Now, let me explain what I'm saying about when I say net. We've built a bunch of solar and a bunch of wind, which has added capacity, but we've taken off a bunch of coal, and insanely, we've taken off some nukes. We took down Indian Point, which is literally the most insane thing I've ever heard. So when you look at the net power additions that we've seen into the system, they've been very they've been very minimal. The other issue is that even with those net power additions, the problem with solar and wind, as you know, is intermittency. The sun's not always out and it's not always windy. Therefore, you have to create these giant batteries. This is actually why, well, you're going to hear this said a lot, that solar and wind are the most efficient or the cheapest power. Well, that's if you just count the solar or wind. If you count the battery, it ain't so cheap. Without a doubt, nuke is by far the most efficient, most cost effective, et cetera. And I could go through a bunch of examples, and we could talk about nuclear accidents, et cetera. But let's leave that aside.
You know, one
So
thing I would
yeah,
insert in
go
there
ahead.
though, because you're talking about we've gone 20 years without any net addition. The reason that's important is besides the fact that, you know, everybody's now plugging in your iPhones and your laptops and your personal electronics are there's so much more in terms of that. But more importantly, everybody's excited about AI. Well, that's going to
Yeah.
take data centers beyond that. Remember all of that excitement last year, the year before about electric vehicles? How are we going to charge those? Right? I mean, there's the amount of energy required to charge all the electric vehicles people think we have, it's like adding entire new states for you know, entire new neighborhoods.
And this is exactly where I was going to go.
Yeah.
Supply has grown minimally, and supply cannot grow quickly. We're not going to build any new coal. We could build new gas, but in the state of New York, they won't even allow a pipeline to come in. They can build the gas plant, but they won't allow a pipeline to come in. You know, you're building all this solar and wind, but you can't build enough. And, you know, I do think this is going to change. To build a new nuke from today, and we'll go to a very specific example, could take 20 years to add. So,
Just
you
on
know,
the permitting alone, you're looking at a decade.
everything you're looking at, it's just, you know, it's going to be very, very difficult. But now that was okay with from the demand perspective in the late teens and around COVID, because we are seeing advances in energy efficiency. You know, just even look around your house, the light bulbs, like, you know, all that stuff. But now we've run into three factors. The first one of these is electric vehicles. As you go through that power has to come from somewhere. If it ain't coming from a, you know, gasoline, it's got to come from someplace. Another one that you didn't mention, but is very real, is reshoring. Okay. So we're beginning to see, and I think this really accelerated post-COVID. It accelerated with Trump. It's accelerated with Biden. And then the last one is AI. When you look at those data centers, and you know, I see these numbers, and it's hard to know how real they are. I've heard that a AI search is 10 to 50 times more data intensive than a Google search. Who knows if that's true? Now, someone might argue and say, well, but the chips are getting more efficient, so won't that counterbalance that?
There are
But
more of them.
but then what happens is the more efficient the chips get, we just keep on using more chips.
Yeah.
So without a doubt, and the thing about power prices, and you know, one thing also about AI and data centers, it cannot deal with intermittency, right? If I've got a factory making cars, I shut down the factory at night. I don't need power. For AI and data centers, I need it constantly. And again, the most constant, least intermittent power on the face of the planet Earth is literally nuclear. Okay, hydroelectric's probably right behind it. But so what happens?
And add to that the fact that everybody wants carbon-free energy right now. This is the
Bingo.
only carbon-free baseload option we have. What
Yeah.
the so-called renewables, especially when you have to add batteries, not only are they not cost effective, I don't think they're environmentally sound. And in addition to all that it's not baseload generation. And for, you know, for people who aren't familiar with the language here, baseload means up all the time.
Always
right?
on. Yeah.
Right. You don't want to have a situation where you're working and your computers go down or your server farm goes down.
I'd amend that. I'd say hydroelectric, when you can build it, actually is also base load, but hydro has its own issues.
Yeah.
But so what's interesting about power prices is that, you know, unlike a lot of things with supply and demand, when there is excess demand, power prices go asymptotic. So if you look at, this is also true of natural gas. If you look at the prices, you'll see these massive spikes that happen, because it's not like power prices are at 50 and then all of a sudden they go to 60 and everyone shuts down, you know.
Right.
And some people have to pay, like, you know, they'll pay infinite amount for the power. So you have, you know, the core supply and demand is really structurally favorable for higher power prices, to which Talen is highly exposed. And I think that as you see this, you're also going to see these asymptotic jumps that are going to happen there. Okay, so we're going to pull back a little bit, and I want to talk a little bit about just the capital structure, the valuation, and then we're going to talk about a couple different ways to think about this. But the core here, let's come back. We have a stock, TLNE. By the way, the market cap today is about 6.2 billion. Let me get the exact price there in my spreadsheet. And I do apologize, everyone. Normally I have this beautiful camera. I'm doing it off my iPhone today. We ran into some last minute issues here. So if there's any problems with the audio,
people are here to hear what you have to say. I don't think anybody's tuning in for the great graphics and production qualities.
58 million shares, $107.70, $6.3 billion is the market cap of the company. Remember before I said they had about 2.3, 2.4 of net debt. Now the net debt is $845 million, okay? That's because they sold the ERCOT assets, they sold the Cumulus assets, etc. Okay, so the total enterprise value of the company is $7 billion. Now, I'm going to go through 3 valuation exercises with you. Number one, and some people may look at this and say, well, that isn't necessarily the way the world works, but I'm going to tell you, it's pretty powerful. The nuke that they have, Susquehanna, was commissioned in 1983. They spent $8 billion on that nuke. If you were to inflation adjust 1983, $8 billion, do you know what it is today? $24 billion, okay? That's if you could get it done. We have a real world example that Southern Company down in Georgia just brought on 2 brand new reactors that have almost the exact same capacity. It took them over 15 years and it cost them $30 billion to be able to bring that on. So if I'm a utility and I want to own nuke, and everyone wants to own nuke again because your clean energy thing, if I'm running a data center, this is very important, and we'll come back to this a little bit later. You know, I need power that's always on. Susquehanna has like a 99.9%, run rate, like it's been on. I also need power. I'd like to say my power is clean. If I'm Google and I'm running a bunch of coal plants, it don't look so good for me. Nuke is as clean as it gets. So you're beginning to see these co-locations. Southern and Company just came out and doubled or tripled the power demand that they're expected to see in the state of Georgia. That's not necessarily because Georgia is growing so fast, but it's because the data centers are moving to Georgia because the brand new nuke came on. So the data centers are now moving away from where they were going to be located to where the power is. There's a major utility that I won't name because I got this information. It's not inside information at all, but there's a major utility that has access to one of the biggest data center areas. And they recently said that if they had the generation, it would take 3 years to build the transmission to just, if they could have the nuke tomorrow, it would still take 3 years. But so this is why I'm going to argue that 24 and $30 billion for Talen, which is 3 to 4 times the current enterprise value, is actually, they're very interesting numbers. If I'm out there and I am PSE&G, I'm Constellation, I'm Vistra, and I say I want to add more generation, well, if I'm going to do a new build, I go, okay, 20 years and $20 billion and a bunch of headache, or I could go out and offer 15 billion for this company, double or 1.23 times, 5 times the stock price, and I could have the generation a year later. That's point number one. Point number two is that the company right now has an estimate out there of 600 to 800 million of EBITDA. I'm going to take 750 because prices are moving in the right way for that. That means that it currently trades at 9.5 times EV to EBITDA. If you compare that to its competitor Vistra, which is has lower quality assets, it's a little messier. Vistra's trading at about the same multiple. It's trading at about 11 times. Constellation, which is the high quality competitor, okay, Constellation trades at currently 17 or actually 18 times. So if I put 18 times the Constellation multiple on Talen's current estimates, I get to $218 a share. That's 100% upside from here. I would argue that Talon should get a premium multiple, because one other thing to consider is that 845 million of EBITDA, or sorry, net debt. This means that the company at 750 million of EBITDA is at 1.2 times net dett to EBITDA. Okay, the company has stated they could go to 3.5 times. 3.5 minus 1.2 is 2.3. 2.3 times 750. Let's do that. Is 1.75 billion dollars. That is, divide by 6247, 28% of the stock they could buy back tomorrow, or that an acquirer could use to leverage the shares. Okay.
Hold on. Let me ask you a question about this though. I hear you. What you're saying is, based on reasonable debt load for the company, they could buy back almost 30% of the shares.
Yes.
Has management talked about, because they're 15 minutes out of bankruptcy, have they talked about being interested in a share buyback, or have they given any indication that either that they're open to it, or if so, at what level?
2 weeks ago, they increased the capacity to $1 billion on the share buyback. They have so far repurchased 493,000 shares, or $38 million worth at $78 a share. So they absolutely have. And one of the things to look at is, if you look at Vistra in particular, and I'm pulling this up on my Bloomberg, what Vistra has done, they've been out and been acquisitive, but Vistra has actually gone back and used their cash flow to buy back shares. The diluted average weighted shares at Vistra have gone from 505 million in 2018 to 349 million today. So they've reduced the share count by 30%. But so, number one, we've got this replacement value argument. And there's going to be these finance purists that are going to be like, oh, that doesn't really matter. Look, if you want to own Nuke, it's going to cost you 2 to 3 times what it would cost to actually just buy the damn thing. So I think people will buy the damn thing. Number two, without any upside to the EBITDA, if you look at the current multiple and put a reasonable comparable multiple, you get a stock that doubles. Number three, they can buy back a third of the stock, not to mention that if you're an acquirer, you go in and that's leverage you can use to pay that price, the higher price for the stock. But here's number four, and this is where it gets even more fun. We think power prices are going higher. This is going to be a multi-year cycle. Okay, this doesn't get fixed tomorrow. There is literally no way to fix it. Yeah, you could have demand destruction, but it's hard to do demand destruction when you need to keep the lights on, right? So in their most recent quarter, they actually put up a chart that discusses what their exposure to higher power prices is, okay? And here's what it says. It says that in 2026, if we went up by $10 a megawatt hour from the current 45, they would add 335 million to EBITDA. That's 50% of their current EBITDA. Let's have some fun with math. Amazon is paying $70. Take the 70. Here's my, for the old school people, here's my HP 12C. Okay.
I have 3 of them.
I actually have 3 of them too. Take the 70 minus 45. That's 25. Okay. Divide by 10. That was the megawatt hours. 2.5 times 335 is 837 million of EBITDA. I'm now going to add that 837 to the 750. That's their current EBITDA run rate. I get 1.5 billion of EV to EBITDA.
And without any expansion of the multiple, you got a doubling of the stock price.
Without any expansion of the multiple.
Or financial engineering.
Or financial engineering. If I put it at 15 times, which is where EV to EBITDA, which is where Constellation was trading before it just had this run, I get a $400 stock price, or almost a triple from here. So, look, I think that you've got a real nice alignment of things. And I'll give you this one last a couple other piece of information.
All right, good. We're starting to get some good questions, by the way.
Yeah, I've got a great contact that, expressed to me, I've heard this now from a couple people, that at one point, one of the major hyperscalers, data center companies, went to one of the major nuke companies, offered to buy 50% of their total capacity for the next 2 decades or 3 decades. And so I honestly think what's going to happen, I'll say a couple things. The company will uplist before year end. Earnings are going to be moving higher. They're going to begin to continue to buy stock. It's hard for them to buy stock at 107 when the stock was at 60. They should be buying it hand over fist, but it's still hard for corporate managements to get over it. I suspect that we're going to see another company, once it uplists, come in and offer to buy the stock at 150 to 200. They'll wait for it to uplist just because it's going to be a lot messier. I do not think the company should sell for 150 to 200. I think the company should hold out for 250, 300. But what you're going to see is this tremendous expansion here. And what we found is this combination of events where, institutions still can't own it. All the utility funds, it doesn't pay a dividend. They can't buy it. Major, those types of investors that usually buy utilities, they're locked out. A lot of mutual funds can't buy it because it trades OTC, but the people on this call can buy it. So you've got this post-bankruptcy, you've got an underlevered balance sheet, you've got a floor on prices, you have, this incredible supply-demand cycle that's coming through. And like I said, I've done, I think this is the 8th or 9th. I did Niagara Mohawk and Bangalore Hydroelectric. I think I've done PCE and PCG twice, in these kinds of situations. When you get these, you hold on. And I'll go to one last thing. A lot of people will look at the stock price and they'll go, oh, I missed it, right? The thing came out, and I'm pulling up the chart here. The thing came out a year ago. It was at $50. First trades, it was in June, actually. First trade was at $46.50. The stock's at 107. I missed it. Well, remember, for a stock to go up threefold, fivefold, tenfold, it has to double first. The numbers support it. And if you go to the last power cycle we had, this is the funnest part. Pull up the chart of PPL, the parent company that actually owned these assets, and go back, and you'll see that in the last period we had a power cycle. This was going into right before the financial crisis. PPL went from $15 a share in 2002 to over $50 a share in 2007. That was a threefold return, okay, for something that had a bunch of regulated assets, et cetera. So, it's very seldom that you find these kinds of opportunities. And, the last thing I'd say tactically, because I know we have, a lot of people here who aren't professional traders, the stock's up in a straight line, super extended from the 50-day moving average. This thing could pull back 10, 20, I don't think 30%, but in a couple of weeks on no news. I fully expect it to. What I would do, and I'm not giving personal financial advice because I'm giving this to the whole world, right. You go in, you buy half, a quarter, a half, 2/3 of what you'd like to own. You own it right now, and then you just hope that sell-off comes, and you load up on that, and that's how you get into a position like this. But yeah, this is probably my favorite stock of the last 5 years.
I'm with you on the fallacy of the we missed it argument. At Deep Knowledge Investing, we've had stock picks that have gone up, 20% and 30%, and people have said, we missed it. And I've said, no, you didn't miss it. And then the stock's doubled from there. And they missed the opportunity to double their money because they were hoping for a triple, I guess. So I'm with you on that. One of the big picture, we're getting some really great specific questions in the chat, but I have a big picture one for you. So here at Deep Knowledge Investing, we're seeing huge amounts of increase in electricity demand for all the reasons we're talking about, right? More devices, electric vehicles, AI leads to more data centers. That's more energy demand. And people want, carbon-free energy. And the best base load option for that is nuclear. Now, the way that we've played that is we've had huge long positions in uranium for the last couple of years. Right. And that we've made more than double our money in that. And I continue to own it because I think uranium is a great way to play this additional demand on nuclear. And, my view on it is the demand for additional uranium is going to come before the supply comes on. As you pointed out, when people want it, when they need it, they're going to pay for it. When uranium is, 5% of the cost of operating a nuclear plant, they don't care. If it doubles, they're going to keep buying it. And so
Yep.
this is a situation where it's up a lot. I don't think we've missed it, right? I still think there's more. Why would you want to own um, the generation like Talon, where you are taking on a certain amount of operating risk and regulatory risk and market risk, things like that, as opposed to owning the physical uranium?
Well,
Or
I'll say
maybe the
two
answer is to
things.
own both.
Well, the answer is to own both. A couple thoughts. I don't know what operating risk I'm taking. These things have no downtime. There have been no material accidents. There have been 37 people that have ever died in a nuclear accident, and there's almost 100 that die every year in a wind generation. From a regulatory perspective, it's going the other way. I guess there's an economic perspective where you could say that if the economy really shatters, but then by the way, the demand for uranium is going to go down.
Agreed.
And let me tell you this, it's a lot easier for me to mine more uranium than it is for me to mine more nuclear plants. As a factual statement. I like them both. One other thing that you didn't ask, but someone else might, in terms of uranium exposure for Susquehanna, they're 100% hedged in 25. They're 92% hedged in 26, 87% hedged in 27, and 97% hedged in 28. So they're fully hedged, and they get none of their uranium from Russia whatsoever. So, I like them both. I like this better because I also think that, I think it gets acquired. I think you've got clear catalyst in front of you. But yes, we've been at Empire. We had a longstanding a recommendation on CCJ. We continue to like uranium, but I think this is better than the uranium stocks, in my opinion.
All right, Enrique. I've got one more question for myself before I go to the questions in the chat, which people are, by the way, everyone in the chat, thank you so much. These are fantastic questions. Great participation here. Enrique, you talked earlier about the market price for power right now being in the mid 40s and the
In
Amazon.
PJM.
Yeah.
Yeah.
And the Amazon contract is over 70. Now I understand, there are differences, but why is it that Amazon is willing to sign a contract for not quite double a comparable rate?
Two reasons. They want to make sure they have the power, and they think it's going to 100.
There we go. All right. So going to the chat here, we have a great question from Yvonne, which I'm going to read to you in a second. There's a comment here from Porcher. I don't think it's a question we need to address, but it's interesting and worth reading. He says, small detail, but geothermal is outstanding for baseload electricity. I think that's a good point. He also points out, and this is a good one as well. You and I are not so positive on solar energy for the reasons you talked about before. There are issues, but Porcher points out that it's great for daytime electric vehicle charging due to no need for inverting and battery storage. I think that's a fair point.
Yeah, and let me just say, I'm not negative on those other things.
Yeah,
I'm just very positive on Talen.
right.
Geothermal is great if you can build it. Look, and we didn't get into the whole concept of SMRs, which are small reactors, etc. There's all kinds of other interesting things. But my point is, here's something you can buy today that's super cheap, that's buying back stock, great balance sheet, and we know it works. So, focus on this first, and then we can talk about all the developmental stuff.
Yeah,
But
no,
those are all
that's a
correct.
great point. I like Porcher's point. I also like your response, which is that's a great point, but I'm picking the things that I like best to put in my portfolio. That's a totally valid answer. Let me go to this question from Yvonne because it's a really good one. She wants to know what happens to your profit projections if the incoming administration, I think she's assuming a change in the White House come November, really January. But if a change in administration, let's reframe that, rescinds the Inflation Reduction Act.
I think that A, those things are difficult to do. B, I think if they do it, they're not going to do all of it. They would go through pieces. And C, I think that a Republican administration under Trump is more likely to double the tax credits for nuke and build and propose building more nukes, not less. I think that's, and look, I don't think that's going to happen. But when you look at the Trump's a very interesting situation. Obviously, his personality, controversial, but the actual economic actions that were undertaken under his administration were very friendly to nuclear energy, would continue to be friendly. So if it was Trump who had done the $10 tax credit and Biden was about to come in, I'd be very afraid. I'd be like, okay, well, that would seem dangerous. Instead, it's the other side. Like, so unless Trump decides to do kind of what Biden did, is say, I don't care if this is good policy or not. I'm just going to do the opposite because Trump did it, which I don't think Trump will do. I certainly hope not. I don't think we're going to get, we're going to see a problem with that. So,
All right, I'm going to summarize your point. I agree with it, by the way. I think what you're saying is over the next few years, the regulatory environment for nuclear is either going to be stable or better. And I agree with that.
yes.
All right, moving on. Question from Tim. Oh, I like this one. So Enrique, earlier you were talking about the potential catalyst of Talen being uplisted. He wants to know what you think the timing is on that. It's a good question.
Uplisting is a black box. It's both from the company standpoint and the exchange. My understanding from company comments and reading what's out there is they're ready to go. It's just paperwork. So I would say I have a high confidence that it happens before year end. It could happen in a month. It could happen in a week, is all of the above. I kind of don't care because it's going to happen. And, if it's going to be impossible for us to time. It's a small catalyst, but it could be the catalyst for the acquisition, because I will tell you this, another publicly traded utility would much rather buy Talen as a publicly listed available. Let me also say one more thing too. I didn't say this before. I think in the next 2 to 3 years, you may see Amazon or Microsoft go and try to buy Constellation. Or if I was BlackRock, if I was one of these, there's $1 trillion of private equity money. Riverstone, I don't know, they lost their shirt on this. I would go in and buy all the new capacity I could right now, because you can't build it again. Right. So I think we're going to see considerable strategic action coming in, and I think one of the big tech companies in private equity is likely to get involved.
And the interesting thing about this is, we're talking about, an $8 billion company where, the stock price could be up a lot, but for some of these tech companies that just want power for data centers, like they have that and more on the balance sheet.
I mean, you could pay $20 billion. Just go back to what I said. Southern built that one reactor for 30, those 2 reactors, same gigawatts, for $30 billion. And you could go pay 15 for this or 20 for this, and you'd have it 6 months from now.
Right.
That's just common sense.
So good question here from, and I'm apologizing. I'm about to mispronounce somebody's name. I think it's Naboth. I apologize if I mispronounced it. But it's a good question. He said he wants to know that you just said there are a number of categories of potential buyers that can't buy Talen Energy. How does that fit into the investment thesis? Is there enough of a base of potential investor demand to support the kind of predicted price rise in the stock? And the follow-up to that is, what do you think that potential investor base looks like? So I think you just did a great job of outlining potential acquirers of the whole company. But as a public company, the real question is, where's the incremental buyer going to come from?
Well, I think that it doesn't have any analyst coverage. It trades OTC, and probably before I started talking about it in February, none of the people on this call had ever heard of this company. So, it's not, there's not 27 analysts covering it. There's no banking to be done. This is how it goes up. The incremental buyer is everyone on this call who hasn't bought the stock yet. So the amount of buyers that can't actually buy it is probably, 20%, 30% of the potential buyers. And that'll be a nice incremental catalyst, but it's a small catalyst. I think as this gets known and understood, that, the stock will just continue to move higher. Yeah.
And I'm sure one of the things the company has considered, or if not, they should be considering, great that they've set aside or authorized $1 billion stock buyback. But what they should do is initiate a small dividend, just to open up the possibility for dividend buyers or dividend ETFs or mutual funds to have the opportunity to buy.
Once they get to the uplisting, they'll do that.
Yeah.
is the answer.
It doesn't have to be big. It just has to be more than zero, and they open up a whole new class of shareholders.
If you look at Vistra, Vistra pays out a 0.93% dividend yield. That would be the perfect example. Constellation pays out a 0.64. And remember, I said that Vistra had retired a third of the shares. So we know what the game plan is. You know, like again, I did one of these calls with another great guy, another good friend of mine, Andrew Walker, the other day, and he goes, "Well, what if the company goes and starts acquiring stuff?" You know, they've given no indication that they're going to do the Vistra model. They're going to go out, they're going to run the operations, they're going to try to get optimal pricing, and then they're just going to buy back stock, pay out a little dividend, and just grind it out until someone comes and offers them $300.
Yeah, that makes sense. Really smart question here from Robert Jackson. And this is something I've been thinking about as well. The new nuclear technology, like the Gen 4 plants, I think that's a phenomenal opportunity. And he wants to know if you think small modular reactors are going to be available soon versus the big older nuclear reactors.
Soon-ish, but not soon enough to impact, not soon enough and not enough to have any impact whatsoever on my thesis.
Yeah.
So
yeah,
they are operational in a couple places in I think in Russia and China, to be honest, because they've been much more aggressive than that. I think what you might see here, I could see in the next 5 years, and what we really should see is the government come around to where it has on semiconductor chips and say, you know, we're willing to spend $30 billion to onshore semiconductor manufacturing. Why don't we spend $100 billion on building nukes? You know, that, I mean, France, which we consider as progressive and liberal as it gets,
75%.
you know, is 60, you know, is completely powered by nuke. So I don't think that's out of the question. Now, at that point, does that have a negative impact on this? You know, I'm not really worried about that because it ain't happening anytime soon. I don't even think this company will be around by the time that happens. But that would be great. There's a U.S. labor. You know, a lot of the stuff is made in the U.S. It's great for power, and we didn't get into the whole disposal accident stuff. It's all like BS. They're not really relevant factors, and I can get deep into the detail if we wanted to.
The disposal stuff, the new generation, the Gen 4 plants, I think they eat nuclear waste. They don't produce it.
Well, yeah, but what I'm saying is that I think we're going to build the previous generation in size. I think we're going to actually see major nuke. The right policy, energy policy, would be to go out and try to build 2 or 3 more constellations and subsidize them by the government. That is the right energy policy. Not to mention drill as much oil as you possibly can, drive oil to 30, and drive Russia out of business. But that's a whole other topic.
I just want everybody to note that noted libertarian Enrique Abeyta just asked for the government to start producing energy and subsidizing it.
Yeah. No, I got no problem with it.
Question from MJ. He's got 2 questions. One, he wants to know, are there any slides available on for this presentation? Do you have anything that we can share?
I don't. So if you go to my website, daily.hxresearch.net, you'll see right at the top, we've pinned this as the free idea. That's there. There's also a...
Wait, hang on. I'm going to put it in the chat. Daily.hx.
Research. No, hxresearch, one word, .net.
Okay, that's in the chat, so you can reach
that's pinned there. The investor presentations on their website are quite good. And we've not put together a presentation, frankly, just because I don't have time, because we put out a crazy amount of content. There's 3 of us. So, you know, I think there's enough in my report, plus what you see on their presentations, that it kind of gets the job done.
All right. Sounds good. And then follow up from MJ. He wants to know if there are any other pure play nuclear power generation companies that are publicly traded.
Constellation Energy, ticker CEG, is the largest. It's the old Baltimore Gas and Electric, $70 billion market cap. It also has gone just absolutely ballistic. And then Vistra, ticker VST, $32 billion market cap. This is the old TXU assets off the top of my head. I'm trying to see where they originally got all their assets from. Those are the two relative pure plays, but neither of those, Talon's as pure as those. There's also a couple others, Southern Company, ticker SO, has had a good run. That's a regulated utility, but they own a lot of nuke. That stock, for a utility just went from 66 to 80 in the last month as that nuke came online. And then I'd say also PSE&G, Public Service Enterprise Group, ticker PEG, has a reasonable nuke portfolio. That stock's also gone from 60 to 75. All of these are quite big market cap, 37 billion. Those other two regulated ones have 2-3% dividend yields. But if you want to know why the XLU is up, which is the utility, everyone's looking at the XLU, which is the utility sector, and saying, oh, everyone's scared. It's a bad sign. There's a move towards defensives. Literally, if you extract, and I'm actually going to write a note about this next week. I think it's 7 stocks, so I'm going to call them the Mag 7 for utilities. You extract 7 stocks, the XLU's down or flat. It's just been that people who have exposure to nuke and exposure to unhedged generation, all the stocks have just, they move like AI stocks. Talon is the best AI play out there, in my opinion.
Yeah, that's an interesting point. And by the way, for people who want to learn more about the other side, as Enrique is making the point that, the rise in the utility index XLU is not necessarily indicative of the fact that we're entering a defensive market. The guy who I think has made a good point on the other side of that is Michael Gayed, who's the lead lag report on Twitter. Sorry, it's lead lag report, not the lead lag report. But go check out his work. He's making the opposite point that we are moving toward a more defensive market. And so for people who want to see the other side of that, you've heard Enrique's point, which is a great one. And I think Michael's made some really good points looking at the macro trading.
I sent Michael a note yesterday because he put a nuke pro nuke post up on LinkedIn. And I said, Michael, let's jump on. I'm not here to argue the whole point about defense, but my point is Michael's actually a fan of the nuke stuff.
He is.
So I want to get him online and let's talk Talon with him and his audience too.
I will moderate that one. I would love to moderate that and get the two of you on. He's great to talk. Michael's one of those guys who I think is really good at engaging with and understanding and listening to the other side. He makes his point, but he genuinely is trying to understand where he could be wrong. I think he's an honest broker when it comes to.
No, Michael's great.
Yeah, I'm a huge fan of his. Good follow-up here from Michael McKay. He wants to know if there's a time frame where buying in the money or out of the money options makes sense. And you know what, Enrique, I haven't even looked at this, but
trades OTC, so there's no options.
No options, right?
So that's a great question. It trades in the pink sheets. So there's no there are no options. When it uplists, there'll be options.
Right. So that's the answer, Michael. And earlier in this discussion, Enrique said he thinks the company will uplist later this year. So later this year would be the time frame where buying options would be possible and make sense. Igor, this is good. He notes that on your website, your buy up to price on Talon is $90. But obviously, given the fact that you still like it here, he wants to know if you're updating the new buy up to price.
I thought I did update it a little while ago. Okay. I just thought I did that a week ago, and I thought it was updated to. So I'm looking at the website. On the post that's on it, it actually says buy up to 120 per share. I'm literally on the website live, so he may be looking at an old post, or if he wants to reach out to me at eabeyta@hxresearch.net, tell me where he's seeing that older buy up to price. And it's two things with the buy up to prices. I'll say two things. Number one.
When Igor just responded, he said open positions. in your open
Oh,
positions. That's
oh,
where you
on the
see
open
it.
positions page.
Yeah.
Okay, so you must be, if you're on the subscriber page.
All right.
Okay, I'll get my guy
All right.
to update that.
Regardless,
But
Enrique's saying buy up to price of 120. The current stock price is one of 775.
yeah,
So that's the update, and the website will be updated. And Igor's already responding. Thank you. Okay. Thanks,
yeah.
Igor. Good. All right. And then a comment from Robert Jackson on SMRs, the small reactors. He points out they can also be used for power generation to process heat, desalinization, and other industrial applications. They also produce a large amount of low carbon electricity. Thank you, Enrique. He'll take on your recommendation for Talen.
So can I say something about SMRs though? I think
Yeah.
this is important. Okay, I love the idea, but I'm going to say this is when there is a publicly traded company that is out there and has a 10 or 15 billion dollar market cap that is doing SMRs and has a $500 million of real revenue, I will buy the living daylights out of it.
Right.
And it'll end up being a 2 to 10 bagger. Until then, with all these companies that are in this speculative phase of, getting up and, I think, what's the one that everyone's talking about? Is it Oklo, or maybe that's nuclear fission? I love the idea. I think it's very speculative. There's nothing wrong with speculation. I think HX readers are going to make a ton of money off of SMR, but sometimes you just wait. It's very often that a $5 or $10 billion company that's proven something out is a much better investment than a $50 to $500 million company that's yet to prove it out. Yes, you could say I made the money from 500 million to 5 billion, but your probability of success went down 90%. I'd rather ride the thing from 5 billion to 50 billion. That's the better way to make money. In my 30 years, I've learned how to avoid a lot of pain and headaches, and that's one of the lessons I've learned.
Yeah, and there, a lot of times people will ask me, why I don't like another idea, and a lot of times my response is the same as yours. It's not that I don't like the other idea; it's that I like what I'm invested in because it gets me the exposure I want. It's not, I'm not against something else. I've found the idea that I think gets me the best exposure to my thesis and has the best upside to my thesis, and limits the downside. And that's where I want to commit capital.
Yeah, and this one, I mean, I struggle to look, stock's very extended. They could trade down 10-15% just on technicals, but I struggle with the downside. I really don't, extended downside is very difficult for me to get from these levels,
Yeah, understood. All right. Enrique, that's everything we've got here. Thank you so much for sharing your research, your knowledge, your information on all of this. For people who, like me, appreciate your work, how can they find you?
Enrique Abeyta, I think that's one word, on Twitter, is my main page, at Enrique Abeyta, and the spellings on all this stuff here. Our website is daily.hxresearch.net. On there, we have a free daily that comes out every day. We've got paid options. We don't give away free ideas very often. At any given time, we may only have 2 or 3 out there. But I'm active on LinkedIn, Facebook, Instagram, stock twits, pretty much everything out there. And we're keeping up on this one in particular and putting a lot of news out there pretty much every day on all those platforms if there's anything relevant.
All right, terrific. Well, Enrique Abeyta from HX Research, thank you so much. Great to get your thesis, your knowledge, your information on Talen Energy. I'm Gary Brode from Deep Knowledge Investing. Want to welcome everybody. Thank you so much for being here with us. And then to the dozen or so people who asked fantastic questions, thank you so much for the interaction. Really glad to have you. This was live streamed on Twitter/X and LinkedIn Live. We'll have the full video up on YouTube later today, and it will be publicly available. So feel free to check it out. It'll be on the Deep Knowledge Investing YouTube page, and then we'll also upload it to X as well. Enrique, any last comments before we sign off?
Look, I think this is a great idea, and I seldom see ideas this well. Trade responsibly, take risks that you're going to be comfortable with. But again, the most important thing I'd say is real money is made on stocks that go up threefold, fivefold, tenfold. They always go up 100% first, and that takes months and years. So, I think if you want to make real money, you find things like this and you just hang on, hold on, and ride it through. That's my best advice.
All right. Sounds good. Enrique, thanks so much. And everyone, thanks so much for being here. And we're all set. Great to have you.
Thanks, everyone.